Hi, my name is Scott Wilson. I'm the Program Director for Single Family Housing for USDA in the state of Colorado. And I'm happy to be here to share with you one of our loan programs that will hopefully help you sell some more real estate. As we all know, there's a big problem in Colorado, and that's the lack of housing inventory. So many of you might have experienced that there's not any houses to show, buyers can't seem to find a house to purchase, and when they do, there's a lot of competition, and it's really hard to get their offer accepted. Well, the solution for this is the USDA Single Close Construction Loan. And our loan program eliminates buyer competition, it guarantees the borrower home ownership, and you just need to help them through the process. So USDA Single Close Construction Loan allows you to buy land for zero down, allows you to build a home for zero down, allows you to get the loan for zero down. It's zero down construction financing, and who's ever heard of it? And it's for real. What it allows the borrower to do is build a manufactured home or a modular home or a traditionally built home. With regards to manufactured homes, they can be new, and it also allows for some existing manufactured houses to be moved onto permanent foundations. The program is, like I said, a zero down loan program. The closing costs in the program can be rolled into the loan as long as the home appraises for it. The interest during this construction is rolled into the loan up to a 12-month period of time, so the borrowers don't have to be making a payment on a house being built and having to pay for rent or a payment on their existing dwelling. Realtors actually are paid at time of loan closing, not when the home is constructed, and incomes can be up to 115% of area median income. And around the Denver area, the counties around the metropolitan area, that equates to about $103,000. The program also does not have a limit with regards to what the mortgage can be or the total sales cost of the project. There is some flexibility in credit and ratios, and that is lender dependent. The interest rate is fixed for 30 years, and there's rules with regards to how much a lender can quote for interest rate. It's a 30-year loan. The lender underwrites the loan, and we here at Rural Development, we just review the underwriting for its completeness to make sure everything was done properly. There is a provision that allows the seller to pay up to 6% in seller concessions. Lenders are approved by Rural Development. Those lenders have to have at least a 2-year construction lending experience in the state of Colorado. The lender themselves are the ones who approve the builders. They're the ones who manage the escrow funds and the construction process and distribute the money as draws are requested. They're also the ones that obtain the documentation for home completion. Rural Development, we issue the loan note guarantee, and we do that prior to the build at time of closing. And realtors, like I shared with you, are paid at time of closing prior to completion. And interest, like I shared before as well, can be rolled into the loan. And interest is, during the construction period, can be as great as 2% higher than their note rate that they're going to get, but that's only during the construction period itself. Rural Development has a direct single close construction loan, and that direct program is for borrowers that have area median incomes of 80% or less. What that program allows us to do is help somebody who has very low or low income still qualify to be able to build a house. We'll stretch those mortgages over 33 to 38 years, which makes it for a smaller payment and allows them to then borrow more money. We also have payment assistance or subsidy, and we can sometimes offer loans as low as 1% interest rate, which then gives them a smaller payment and helps them qualify for more as well. Under the direct program, however, we do have area mortgage limits. So these are the 3 lenders that are approved in the state of Colorado that can do the single close construction loan for the guaranteed borrower. And this last slide talks about existing manufactured pilot program, and that is where I shared at the very beginning. We do loans on brand new manufactured housings, but we also do it on some used manufactured housing. These are the criteria for that. So if we were to take like a manufactured house that was in a mobile home park, that home would have to be built after no earlier than 2006, so 2006 or later. and that home would have to be moved onto a permanent foundation. It has to be at least 400 square feet. It will then be purged to the fee simple property, and the property, that manufactured house has to have an economic life of at least 30 years. So that's what I wanted to share today. I know I didn't build a slide for this, but there are 3 simple steps that you kind of need to follow for success, and that would be 1, have your borrowers get approved for a loan so you know what dollar amount they can qualify for. 2, have them identify or help them find a builder who can give them an idea of what they want to build and what the cost would be. And then 3, you would subtract that amount from what they're approved to borrow, and that will tell you how much you could afford to spend on a lot. And 5 would be get that lot under contract and get that contract and application into us so that we can approve them for their construction loan. Thanks for your time. I hope this helps you guys do more business in Colorado in this particular market.